All right, so let's start with the big story that we're tracking on WION at this hour. Donald Trump's surprise move to impose a 25% tariff on Indian goods has sent shockwaves through the Indian markets. The Sensex dropped nearly 800 points in intraday trade before it partially recovered. Brokerages have called it a knee-jerk reaction, with expectations that the final tariffs may settle at about 15 to 20% as trade talks continue. Now, Goldman Sachs estimates a 2% hit to Indian earnings if the tariffs are enforced, but sees no change in India's EPS growth forecast of 12 to 14% for 2025-2026. The Indian equities have already underperformed EM peers by about 15 percentage points this year. Nomura has cautioned that the elevated tariffs could pose a downside risk to India's GDP growth forecast. High-frequency data already shows sluggish urban demand, weak private capex, and slowing credit growth. Nomura expects the RBI to resume the rate cuts, projecting 25 basis point cuts in both October and December. The Barclays has echoed a limited macro impact, pegging the GDP drag at 30 basis points. It also has noted that the rupee looks oversold, with a possible RBI intervention to manage the currency volatility. The brokerages have warned of broader strategic fallout. The PL Capital links the tariff says that the tariff move to US displeasure over India's stance on Russian oil, BRICS alignment, and recent defense procurement decision. The Bernstein has said that India's position in the China Plus One strategy is weakening, especially if China settles at 34% tariff level. Angel One expects export-oriented stocks to underperform, while investors may shift focus to domestic themes. 25% tariff that's been imposed by the Trump administration on India, of course, will have some serious ramifications. And to tell us more on this and to help make sense of how things could, of course, unfold from here, we're joined on this broadcast by Mr. Mukesh Bhutani, who's a managing partner at BMR Legal. Mr. Bhutani, thank you very much indeed for joining us here on WION. Now, this is a critical moment in terms of how this will impact the US-India relationship and also how this impacts the Indian markets. In your assessment, looking at the short term, the medium term and the long term, how do you think the markets are going to brace themselves for this impact of 25% tariffs in India?
Well, we are experiencing what is a short-term reaction to the tariff announcements. I continue to stay bullish as far as the medium and the long term is concerned, and hope and wish that sensibilities return back and people are back on the negotiation table and use some smart diplomacy in order to come to a conclusion. I don't think that there was wide anticipation that India would be able to conclude the limited free trade agreement with the United States before the tariff deadline triggered off. I think what has come as a surprise has been that no further concession was made insofar as the timelines for imposition of tariff is concerned. So that clearly is the short-term shock that we are experiencing. Though not completely surprising. I think what both the sides are missing out on, or I think in particular the US is missing out on, is that US is stuck into this figure called the merchandise exports.
Right.
The $45 billion trade deficit between India and US. But that's not the correct way to look at cross-border trade. You need to factor in investor sentiment, the amount of institutional investors that's coming in. More importantly, even if you look at the merchandise exports, how can you forget the fact that there are many US technology companies who have a large consumer base in India? What about the earnings that these US companies have from the Indian customer base? So I think we are missing the big picture over here, and we seem to have fallen into a deadline that we have imposed on ourselves, and we are seeing the reaction. Having said that, I continue to stay bullish. We still have 7 days time because the imposition is not from today.
Correct.
It's 7 days we have. And between now and the end of the week, diplomacy plays out and we are back on the negotiation table.
We hope to be back on the negotiation table, but this is how things stand at this moment. The India-US trade stands at about $131 billion. This is bilateral trade. India was hoping that this would go up to $500 billion in the next 5 years. But looking at Donald Trump, who seems to be tying in a lot of geopolitical issues to trade with India, how do you think this is going to impact the India-US equation going forward?
Well, we have to recognize that both the countries will have certain positions which would be non-negotiable on each side. And that's what prevents countries from coming into a common understanding of free trade agreement. Gone are the days when we had comprehensive free trade agreement, which included investments, movements of people, encompassing financial services, so on and so forth. So that's why it makes sense for countries to get into a limited trade agreement. At least we try to avoid the situation we have today where there is a tariff war between both the countries. I think that, many things are getting mixed up over here. Both the sides will have non-negotiable position. We know what positions India has on the non-negotiable side. I don't see how India is going to stop buying crude oil from Russia. And the reasons for that are very simple. With 85% of our crude oil requirements being contingent upon imports, the pricing is very critical because Absolutely. It has a direct impact on the fiscal deficit. On the other hand, I don't see how politically palatable it would be for India to make any concessions to the US on the agriculture. We saw what happened
Absolutely.
on the 3 farm bills and how sensitive and emotive that subject is for lawmakers in India. So I don't see these two to be negotiable positions. On the other hand, US may have some positions which are not negotiable. I think what has come as a surprise is the rate of 25%, because if you look at how US has reacted to most of the countries, it has settled at a penal rate of roughly around 15%. I think one could have understood imposition of that kind of rate, but I think 25% will be unsustainable, and we are already seeing all kinds of figures being spoken about. Some of them, though, being exaggerated as to what impact this will have on the Indian GDP. I think the most realistic and conservative rate, should these rates continue, tariff rates continue, would be a reduction in the GDP of 0.2%.
Right.
But I think people seem to be reacting or overreacting and exaggerating insofar as the estimates of the impact on GDP is concerned.
I think you've touched upon a number of very key, important issues. We need to wait and watch as to how all of this plays out. But thank you very much for the time being, Mr. Mukesh Bhutani, for joining us with
Thanks
all that perspective there. For all the latest news, download the WION app and subscribe to our YouTube channel.